Welcome back, family. How you guys doing? Hope everybody is having a good weekend. It is a long weekend, and if you're celebrating Juneteenth, let me just say happy Juneteenth. So we wouldn't get into the history of it, but happy Juneteenth, guys, and welcome back to the show, my family. Hope everybody is doing wonderful, and we're gonna get right into it. Talking about the stock market, talking about the crash. Today was another bloodbath where a lot of stuff fell down. And if you're using margin, I feel your pain. If your things are down, sometimes you have to sell to cover your margins. I feel your pain. But we are in an oversold category and we should expect a bounce. It is a long weekend, so we expect things to bounce. We still love the oil stocks. We still love company like Devon. We still love company like Corsair. We still love company like Apple. But what we're going to do right now, we're going to start the ball rolling as I always do, guys. And we're going to tune on to Jim Cramer and Jeff Marks for the CNBC Investment Club.
CNBC Investing Club members. We look at this market, Jim, and the first thing we think of is, would it have been better if we opened down big and then rallied instead of just opening up big, then kind of selling off to where it is and then catching something? And you pointed out immediately, don't forget, we have a witching hour at the end of the day, 3-day weekend. It's a very long day. So these are probably not going to be what we're looking at in 6-7 more hours. I don't want to predict it, but I do want to say that there are signs that people who have been really negative, Apple, kind of stabilizing after being down. Adobe, down 9 after being down 14, 15. These are what I'm keying on. I'm not saying these are signs that we're bottoming. I'm just keying on them because it's what I look at when I try to figure out whether there's a little bit more enthusiasm than we thought.
Yeah, you bring up a good point. Maybe there were some scalpers this morning who bought late yesterday, and then when the market rallies, call it 80 basis points. Well, look, that's a win for them.
Yes,
and you can take almost any win that you can get in this market, but we are oversold as much as really we've been all year.
Right. This is the low. We were at 10.72 as you put on January 27th, which was a great time to buy. I thought what you were talking about earlier in terms of what the worst week since March 2020, another good week to buy. Now, the problem with all these is that you hear them constantly, and these are all dip buying phrases. So I want to be careful when I say that because there were many things that were not in play now that were in play in 2020 because we had the government come in massively. Here we have the government coming in massively the wrong way.
Yeah, right.
But we're all looking for totems. That's what we're looking for. It's just totems.
Yeah, and I think, look, historically, again, with the oscillator this oversold, we're holding our nose. We're doing a little bit of buying, not, over aggressive, but we're looking at things. We're trying to be a little bit more opportunistic because there has just been so much carnage this week.
Right. So let's talk about what would make it so that the Fed would be looking like they're winning. Used cars be going down, whether we know that repossessions are up. Oil going down. Now, I like oil. We'll buy oil. We'll buy the ones that yield a great deal because they yield what they're getting at above 90.
Even at 115, which is where
and
WTI
I just think
is
as
today.
they throw those away, we want to be in them. But obviously, if you're the Fed, you want to see oil go back to, say, 110, the beginning of a win. Now, when you speak about what the Fed needs to win, obviously it's a long game. But there are many people who I think have just written off Powell. So if anything's really good that happens, look at the HYG. I mean, wow, right off Powell at your own peril. But I do think, and Dow, by the way, is down. Remember, we wanted Dow's down 19%. Looks like maybe that's the one that cracks. But we're starting to see things like Dow, the chemical company, being downgraded. We see Toll Brothers being downgraded. These are signs of capitulation. We haven't had a lot of capitulation.
Yeah, finally, some analysts throwing in the towel on some of the stocks, even though they are down and they have been hit. The home builders, especially. Jim, you pointed out something to me earlier this morning. So you have a note from Needham that basically says Apple's brand is worth $1 trillion. Is this sort of a last grasp of things?
I get to speak I don't know. I mean, yes, the trillion number.
It's a $2 trillion company.
People are like, people again are so. There's Apple on Lee writ large. Every time Apple reports, I have a conference call with Tim and Luca, who's the CFO. And what we talk about is what they tend to want to talk about. But then recently, in the last 3-4 4 calls, I've said we have to start talking about lifetime value. How do you value lifetime value of a subscriber?
Yeah.
They keep saying, listen, Jim, that's unimportant. That's not what we look at. The piece by Needham about $1 trillion was about LTV and how you have a core base of people who take the product and that you can start figuring out a lifetime value, which there you get to $1 trillion. And I like that call, and I will use it with Tim and Luca in my next phone call.
There have been some reports that Apple is looking into switching how they sell their iPhones to more of a subscription.
I've been urging them to do that,
Jeff. Goes exactly to your long-term value.
They've completely ridiculed me when I've said that. But I've been urging them to do that. Well, I shouldn't say ridicule, they laugh. But I think that that's what they have to do. People should know that I convinced them to break out the service revenue. So before people think I'm just, I'm one of the people convinced them, but before people just think that I'm just a pop-off, I endlessly worked on them about the service revenue. And then one day they called me on the conference call and said, okay, Jim, you got your way. We broke out the service revenue. It's bigger than a bread box. Well, take a look at service revenue now. That's what people care about.
And that was really the key to having Apple re-rate from a IT hardware type of company to more like a consumer product, like a Procter or a Clorox.
Well, that's how you got, now it's a 20 multiple. That's how you got from 16 to 26.
Right.
Now it's pulled back to 20 multiple. And obviously, if the earnings are coming down, it's actually higher than that. But I don't know how much they're coming down. They give you the leeway of $4 to $8 billion. Now, there's an amazing story. I know we'll go back to Constellation, which you bought. Yeah. Amazing story about Amazon in the Wall Street Journal today, which does talk about how they overhired. They may have been a big reason why we actually had a labor shortage. It seems they were that big. Now, the stock is up, I think, in part because now we're realizing it wasn't Jassy.
Yeah.
It was Bezos.
Right. Bezos, when the pandemic broke out, he had sort of, it sounded like a less hands-on role, and then he kind of got back in. To your point about hiring, Wall Street Journal pointed out that in 27 months, Amazon added as many employees as the entire workforces of UPS and Costco combined. So it was a spree of monumental.
Yes. I mean, they were almost as if they were the U.S. Army in 1939.
At decent wages, too.
Yes. Yeah. They jacked up wages. They jacked up job hopping. You take them out of the equation, I think you might, again, find the Fed needs to see unemployment go to 5.6. These are numbers that I say. But everything's going the Fed's way since everyone's written the Fed off. Mm-hmm. I think it's kind of funny. Now, we have Loop Capital starting Humana with a buy. We had Mr. Broussard, the CEO of Humana, on this week. Everything's going bullish, Humana. No one cares. I think that's a mistake when no one cares. This stock has held up well. Why? Because they now have data which shows that COVID is less impactful to the bottom line than the flu. So that's a big windfall for them because the costs for COVID are very high.
Right. And this isn't a company whose earnings are going to see too big of a hit if we do enter into the recession. And I think because those earnings are so defensible, the stock acts pretty defensive, only down 8%.
No, it's just it's such a huge buy.
It was a good day for healthcare too. Eli Lilly was having a strong day as well. Johnson and Johnson.
These are the ones you want.
Up. People coming back to these names.
No, these are the ones you want. Now Lilly was up 10, now it's up 8, but that's okay. This is triple witch. It's a long day, which brings me to Qualcomm. All right, now one of the worst picks that we've had of late, we've had some bad ones, obviously, like everybody else, is Qualcomm, and that was after Qualcomm was on CNBC and really said a great story, and the story has, we don't know if it's panned out or not, but people decided it wasn't. So Cristiano Mon's going to come on tonight. I think it's very interesting that even though he's coming on, the stock continues to go down. Now, that may be because of semiconductors, SMH, but this is as if he's not coming on, or if whatever he says is going to be wrong, 9 times earnings. Typically, when a guy comes on, he's happy to come on, and has something that obviously he's not happy to come on to say bad things, you would expect Qualcomm to be up. But this tape is so horrible, Qualcomm's down. I think it's important. I won this Constellation, classic stock to buy in a slowdown, which we're definitely going to have. We obviously are with the slowdown, and I feel terrifically about that. Once again, I don't think people that's a great stock right here. One thing, again, I want to make the point. We will buy oils in weakness because we think that the oil stocks that we're buying are not going to come down too much, given the fact that they have, Pioneer is a variable dividend. But they're really a hedge for oil going up if the rest of the market goes down. And I'll buy this any day. I mean, here. If it goes down to here, totally understandable, but then you'd be yielding 20.
Yeah.
So anyway,
oil stays up. Yeah. Sure.
Anyway, I want to make the point that it's obviously a very bad time in the market, but I do see positive signs. But we're not, we still have money to commit. I'm anxious to watch to see if oil, cars, and apparel go down. If they do in price, then the Fed is going to win. They need those down, and if they get them, they'll win. Anyway, for Jeff Marks, this is Jim Cramer. I want to wish everybody a happy Father's Day. Don't forget to commemorate Juneteenth. I've been looking into it. It's a remarkable holiday. Remember, slaves were freed two months after they should have been freed. So let's stay focused on that holiday too. Thank you very much.
All right, guys. Thank you so much. Welcome back. That was a lot to take in, and I hope you guys did get a lot out of that. I know I had it to run for a little bit, but I thought that was a very important clip and a very important meeting for you guys to really understand what's going on in the stock market and the stock market crash. I actually wanted to give you guys a lot of information. So we know that the stock's been down, and we think one of the major problems is the war in Ukraine. As I said last night in a previous live, I sympathize with the people of Ukraine, but we're in the situation where with that war and all the embargoes put on Russia, it's actually also hurt the United States. So I know you're feeling it at the pump. So I kind of feel your pain on that. If things happen and come to some kind of conclusion in Ukraine, if a truce is come out and something is happening, I don't think the Putin is going to want to withdraw. If that happens, and if the China lockdown stop and everything come back to normal, we'll see a really good bounce in stocks. But what I know about the U.S. economy, it's very strong. I know they're very resilient, and I think that with we being oversold, we will see a bounce in stocks come Tuesday when the stock market opens. So I think it's a long weekend, and we have a way of bouncing back. So hey, it might be the time for you to buy some stocks if you can. It is a nice time to get in into some levels. I mean, some companies are way down, and it is a buying opportunity. I want to say it is an opportunity for you if you never buy stock before also. If you never buy stock before, because last year when I started to buy some Apple, and with everything that happened, I am still up in Apple. So it is the greatest opportunity. There are people that are down, and people that are down, I will tell you, stay the course, be patient. I'm here to give you all the encouragement I can give, and you would be successful. For the people that never invested before, I want you to go to Robinhood and open your account. I'm not even leaving any referral link or anything. I want you to go over there and open your account and get started. Get started in doing that, because that is very, very, very important, guys. So if you never saw the Robinhood, it's robinhood.com. So go over there and get your account started, guys. You could go over there. As I said before, it is very simple, self-explanatory. Just go ahead, follow the My Account plan, sign up, put your bank information in, and all that good stuff, and you could get started. So, guys, as you know, we're all family here. I love you guys. I value your time. If you need some water, if you need some coffee, go that. We're going to share some stocks right now, and stay till the end of this, which should be in a couple of minutes, and I'll tell you how you can get one of my books for free. As I always do, I always like giving back to you guys. So this is the Robinhood website, guys. Go there. It's commission-free trading. So you have no excuses. Go over there and start your account. All right, guys? So that's what we're going to do, guys. So now we're going to talk about some stocks. There's a couple of stocks I want to share with you. I know that oil is down, but what I also know is that the dividend on these oil is crazy. You get an opportunity to buy some. We're going to talk about a couple companies today. We're going to talk about tech companies. We're going to talk about with supplies and everything going on. We always need supplies. With the COVID is still here. So we're going to discuss as we go ahead a couple companies that I actually wants to share with you guys. So as I said before, drum roll, let's keep going. Let's talk about one of my favorite companies. I know I talk a lot to you guys about this company, but it is worth sharing with you again. Is Devon Energy, guys. You're still getting an 8% dividend with Devon. It is amazing company, guys. I said before, dividend is good. So this is your opportunity. Don't let this opportunity pass. And within the next week or so, when Devon go up and you miss the point to get a dividend, you miss to make money. I say, if I didn't know, you know what? I should have buy that. Believe me, that has also happened to me. So that's what I'm saying. Get yourself some Devon Energy, guys. Get yourself some Devon. Don't let the opportunity pass you. It is a great opportunity to buy a great company and get a nice dividend. I said that's how you could build cash. That's how you could build your portfolio. That's how you could become rich. Let's talk about another company, guys. As we J&J, Johnson & Johnson. Great opportunity to get into a healthcare as inflation rises. The healthcare is where it's at. Healthcare going to always be around. Healthcare is going to rise. Another opportunity being done. This is a company that should split in a little bit. This is a company where the value, you're going to get great value. So the next company, it is Johnson & Johnson. Don't miss the opportunity to get started into some great company. A wonderful dividend, guys. Again, Johnson & Johnson, another great company. So as you guys know, I like to mix it up when I'm giving you companies. I like to mix up. I like to give you different sectors. I like to show you how to diversify your portfolio so we're not sticking on one thing. So if one sector is suffering, you know, you're going to be good. As I said before, you want to make sure you diversify. And I'm going to talk about another company, and it's Eli Lilly. Wonderful company. They work on Alzheimer's drugs. They have just come out with obesity drugs, and they have a lot of things going on. So we're talking about healthcare, and this is another wonderful healthcare company that you could get in. I tell you before, you know what? I expect to see a bump in the market come Tuesday morning because we're oversold. We could only get that much oversold before things start rising. Guys, as I said before, I doesn't have a whole sort of time. So I'm kind of trying to get through some of the stocks I want to share with you. Believe me, I have way more that I want to share with you but I just got to choose my pick here very, very careful. And another pick I'm going to choose is Procter & Gamble. Instead of going, I could have shared a Walmart, I could have shared a Target, which I think they're still great companies. But Procter & Gamble, you get to cover that basis because some of the supplies you have, some of the stuff you need, Procter & Gamble. Can't go wrong with Procter & Gamble. I mean, it's a great opportunity to get in at $132. And I think they gave a nice dividend. I think it's a 2.5 dividend. And I always tell you, you build wealth by reinvesting the dividend. Or if you need to just get that monthly cash, you could get that dividend and take that dividend. So Procter & Gamble, guys, and another amazing company. So let's keep it moving and give me another drum roll because, you know, I'm trying to give you as much information as I can here. As I said before, thank you for staying with me. We're going to talk about what company? AbbVie, another great company. I think I shared that company with you last week, but I think it is worth me getting back to it and telling you that AbbVie is another wonderful company. Great dividend. As you guys know, we love dividend. We love companies that gives back. We love companies that buy back. And you can take that dividend, as I said, reinvest it and just keep that portfolio going. Sorry, that was Apple. That was Apple. And Apple still give a wonderful dividend, sorry. But I wanted to share AbbVie with you, which I'm going to do in a minute here. Let me go ahead and share Apple with you. I think Apple is a great opportunity. But I think I did share Apple with you again already, so. You know, so. But I think I did share Apple with you. So what we're going to do, we're going to go to NVIDIA. NVIDIA does high performance chips. I think NVIDIA, it is the future. They also give a dividend. So NVIDIA, guys, this is another company that you can get into. Also, don't overestimate Facebook. I still think Facebook is good. You're getting Facebook as a great value. And I know Facebook is a place that we chat, but Facebook has become a pioneer into small business, and Facebook Reels and Instagram Reels. I think they're going to be rivaling in TikTok. And I believe in Mark Zuckerberg to get things right, and you will get Facebook at a wonderful, wonderful level. So it is a great, great opportunity. Guys, so as I said before, as you know, your time is very valuable, and we're going to be here tomorrow. So what we're going to do is I want you to go to this website right here, where you can download a free copy of my book. Here you go. Let me just share the website with you guys. Well, so if you go to this website right here, you can download a free copy of Real Estate Marketing, How to Be a Real Estate Millionaire. I will talk tomorrow about the real estate market, and we'll tune in tomorrow around 9 for the real estate market, and I will tell you exactly what happening, how you could be prepared to cash in big into the real estate market. Anyway, guys, I love you guys. We're all family. We're building wealth one investment at a time. And thank you for your love. Thank you for your support. And thank you for joining me on here, where we talk stock market and we building wealth one investment at a time. Anyway, guys, see you. Thank you for joining me on my